And my family built an incredible engine, right? And I wanted to supercharge that thing. And so, I was bringing in tools and management processes that I had learned along the way and said, I'm gonna supercharge this.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week as we get back into school here in Ohio. We've got another great guest for you today. Nate Fisher is joining us from Columbus. I was lucky enough to just go up and have lunch with him last week, so really got to know him there, and but so excited to bring him to you. He's done a ton of things, really had a lot of success, but really interesting because he's worked with his family. He grew up in multifamily, so I'll let him tell you all that. But first, I'm going to just read the bio that I have on him, and I'll bring him in and let him tell you more about his background in multifamily and what he's doing today. So he's a highly experienced real estate professional with over 25 years of expertise in multifamily investments. He's the founder of Peak 10 Group. That's what he's doing today, a commercial real estate investment firm managing 400 market rate apartments in Dayton, Ohio, and Protective Thermal Solutions, a pest control company servicing multifamily commercial properties. Nate has invested in over 5,000 units in multiple markets and has a total acquisition value of over $400 million. He's an active member of the Columbus Apartment Association and Greater Dayton Apartment Associations, holding leadership positions, and is a licensed real estate salesperson in Ohio. Nate, that's a lot. Looking forward to getting into all this with you. But first of all, man, thanks so much for joining us today. I appreciate you coming on the show.
Thanks a ton for having me, man. Really excited to be here and love to share with your listeners.
Yeah. Well, Nate, if you don't mind, take us all the way back. I know it's a family business, so tell us a little bit about, initially getting into real estate. Did you just jump into it right out of high school, right out of college? What did that look like for you?
Yeah. So, I grew up in a multifamily family. So from a very, 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 very young age, I've been around this business. My folks, my mom and my dad, were doing I'll call it the Burr method, doing what a lot of our counterparts are trying to do today. They were doing it in the late 60s, early 70s when I was a little kid. So, from a very, very young age, I was running work orders. I mean, some of my earliest memories are falling asleep in the front of the work truck, right? doing service calls with my dad. And so grew up here in Columbus, Ohio. Was always around the business and knew that I wanted to be a part of it. Just didn't really always know where I fit in.
Yeah. Nate, real quick before you go too much, how did your dad get into it? Just real quick. Like, did he start on the property management maintenance side and then he started buying his own stuff, or was he doing something completely different and started buying? How did he get into it?
Yeah. So not too dissimilar to you, Lee, grew up on a farm, son of a farm family.
Yeah.
And he was the first one to go to college, got down to Ohio State and decided he wanted to be a math major and figured out, what? I'm watching this real estate thing. I can buy a double and I'll live in the trailer park near the fairgrounds at Ohio State and I'll flip this double. So, wow. I mean, that's how he got it. And, that double, I drive by it. It's still around, still there. Someone's probably flipped it 20 times, 30 times since then. So that's how it all started.
Okay.
And so he was working his W-2 and doing real estate on the side, him and my mom. So
just slowly build it up. And then eventually, obviously, he went full time into it.
Yeah, he really didn't go full time until about 1972. So he had some properties, but took a W-2 job in this crazy place called Michigan. So I was born in Michigan for those Ohio State people, and then moved back to Columbus to go real estate full time in the early 70s.
Yeah, you can't stay in Michigan too long. I mean, you can go there for a little bit, but you got to get back to Columbus. So that makes sense. Okay, cool, Nate. So that just neat backstory there. Just interesting how, real estate's kind of timeless. I mean, it worked back in the 70s. It works today. It's different, different interest rates, although they had really high interest rates in the 70s, right? And now we're complaining about 6-7%. But prices are really high. So just different flavors, but kind of similar strategy really that continues to work. So you're growing up in it. But maybe just take us through, as you're going through high school, going through college, what did that look like? And when did you kind of get into the business yourself?
Yeah, I worked for the family business in my summers in high school and in college.
Okay.
But I saw the relationship that my father and my brother had, and I didn't want that relationship. So
The older brother, I'm guessing he was older.
Okay. Yeah, I've got an older brother and a younger sister. And so I went to Ohio State and I got a real estate degree. And, I was dead set on that. Started college knowing I wanted to get a real estate degree in the business college. And then after college, I did a little bit of commercial brokerage, but said, you know what? It's not time to go back to work for the family. I'm going to go out and I'm going to work for a Canadian company doing ski resort development. So that's where the Peak 10 kind of mountain thing comes in. And I did that I worked for as a project manager for a ski resort based village development company for 5 years.
Neat. Okay. But then eventually what? Then you did come into the family business?
Yeah. And so I had my own, the first iteration of Peak 10 from about 2003 through 2008. And then great financial crisis hit. And I said, you know what? It's now, there wasn't a lot of work for a small development guy. Mm-hmm. And I said, now's the time to go back to the family. And so I really entered the family business, which at this time was about 1,200 C-class properties on the east side of Columbus. So wow. I entered in about 2008.
Wow. Big portfolio. And C-class, it was, held up pretty well. Tell us about that. Like how to do through the financial crisis.
Well, if you go back and you think about it, the C-class properties were already in a recession, so to speak, coming out of 2004 because they were, our government was pushing home ownership, right? Everybody had to own a home at that time. So going into the great financial crisis, our occupancy rates were already low. And so it was a little bit of a challenging time because you could rent an apartment cheaper, or you could buy a house cheaper than you could rent an apartment. So it was a challenging time and I could see the demographic wave coming. And so that's why I said, you know what, I'm going to go and I'm going to really learn the property management space. I'm going to become a certified property manager, which is a designation I have, and become an expert, brought a ton of technology. I could see the wave coming and that was going to hit the family. Yeah. And so that was I brought a lot of technology into the property management business for my family.
Neat. Well, how receptive were they? How'd that go? Tell us about, just working in the property management business and owning those properties. Cause you guys you own them yourselves, you're managing them yourselves. But then you're doing it with family, right? So yeah, just tell us a little bit about that.
Well, I will say, the thing that my brother and my mother and my father, and I inherited, that was a really, really strong work ethic. Mm-hmm. Okay. And my family built an incredible engine, right? And I wanted to supercharge that thing. And so, I was bringing in tools and management processes that I had learned along the way and said, I'm going to supercharge this. And what I found out that sometimes it's real easy to get complacent in your portfolio and take your eyes off the prize, right? Sure. And so what I found is there was a lot of inefficiencies with I'll call it the old way of doing business.
Yeah.
And so there was a lot of evictions being filed in the family portfolio. And, so I just sort of reinvented some of the systems and got our evictions down from, 15 to 20 a month to 2 or 3. So, just sort of reimagined and got us ready. And so learned a lot, but, like you said earlier, it was a different time and a different era. And now in this modern era of how we do financing and how we do deals is just different from what my mother and father did. And not that way, it's just a different way. And so there was a lot of friction. I'm not going to lie. There was a lot of challenges with working in a we've always done it this way kind of business. And I learned pretty quick that I wasn't going to turn the family business into the bright, shiny Ferrari that I wanted to build.
Yeah. Yeah. Well, as you're talking about that, Nate, it just makes me think like what you are coming in like the new owner almost. I mean, that's what we're looking for. We're looking for people that have owned the property and not only is it, like your parents would be a great example, probably from what you're explaining, that like they've done incredibly well. I mean, they've owned the property for a long time. And, two things. One, they kind of want to just keep doing things the way they have been. So maybe there's better ways to do it and more technology that'll make you more profitable. And they really don't want to do it because it's, it's confusing. And hey, we've always done it this way. And then two, they probably have low debt on the property. They got in at a great basis, right? So like they're cash flowing like crazy without, all this innovation and raising rents and all this. So like they don't have the motivation. They don't have the need to do all that. So it's right for a new owner to come in and say, well, I do want to adopt all this new innovation and do all these new things. And I'm going to have more debt because I'm going to pay a lot more for the property than your parents did. And so I kind of need to raise rent and I'm going to push it. And so that new owner wants to and needs to push rent, push innovation, push efficiencies, and get these properties up and running to their optimal, ability or whatever, optimal efficiency and profitability. And so it's that new owner, but like you're coming in like that, but you still got the old owner there. So I can see how that, normally the new owner comes in and the old owner goes and retires on that big windfall or whatever. And yet you're like the new owner coming in, the old owner's still there.
Yeah. I mean, it's kind of like kind of like doing a value add on the portfolio you already own. Right. Yeah, and so they're definitely, you're right. There's definitely a lot of challenges in that. And, my dad would go out and buy a truck, or he'd go out and buy a skid steer, he'd go out and buy a lift. And, I sort of was butting my head against the wall a few times. But one of the things that changed when I got in there was we started to do outside investment because we were making a lot of money, and we always couldn't, go find enough stuff to buy. So in 2013, we started into the Austin, Texas market with another family. And that was our first, investment outside, partnering up, which was a new way for my mom and dad, right? A new way for my brother, new way for my mother, and a new way of thinking. And that started a 10-year relationship, and we were off to the races in Texas, and we can kind of get into that modern era. And then we got into the value add as fast as we could down there with our partner. And at the same time, while I was there, I started into the Dayton market in 2016, and I had to go with a new cost structure. And we started taking outside money. So traditionally, a lot of our deals are 60% Fisher family related, my kids, longtime employees, my brother, my sister, they're my partners now. And so that started off a new era. So entering the Dayton market in 2016 with a new cost structure was very important as well.
Yeah. Well, Nate, the biggest thing that I'm thinking with you guys getting into Austin, it's different for you guys. I would think the biggest difference, or one of the biggest differences, is you're probably not managing these yourself, right? So are you guys using third-party property management when you got into Austin?
Well, it was actually another Columbus family. The son went down there and he started his own property management company.
Okay. So it was still in-house property management, just the Fisher family didn't have control of it.
Correct.
Okay. Because I was going to ask you about that, just your experience. So you really don't even have experience with third-party property management, do you? It's always been really in-house, even though I guess anything that you noticed about the Austin properties that you guys bought and having somebody else manage it, was that difficult for you and your family? And were there things that they did differently that you didn't like, or you guys, noticed like, oh, we definitely do that differently?
For sure. I think that the secret sauce of the family business was always is very quick work orders, curb appeal on the property, thinking like an owner, doing what you have to do. And we would create a Class A apartment experience for a Class C property. Now, all those things I just said cost money. Yep. And so it took us a long time to adapt to a partner in that 95% was okay. We didn't have to go 110%. We kept wanting him to go 110. Do this, you got to do that. You got to spend well, he's like, no, we don't. We can make just as much money if we get 95%. Now that sounds weird, but there was a lot of, it just took us a while to get our footing and be comfortable with his style of management and be accepting that the money he was making, the decisions he was making were good. It was a little rocky at first, but I quickly learned that, hey, he's a great property manager. I'm going to let him do his thing. I'm not going to try to micromanage him with my company's philosophy. If we get close, we're okay. We're all right.
Right. Yeah. As long as things are going pretty well. Yeah. You're not down there at some point. There's got to be one cook in the kitchen, right? Somebody's got to be making that decision. Okay. So that's interesting. You mentioned those three things, and I love those. Quick work orders. I could not agree with that more. There's no better way to tick off your residents and get people moving out than not answer and get bad reviews, right, on online than not answering work orders. Curb appeal's big. The people that already live there feel better about living there. And then when people come to see the property, it's the first impression, right? When they pull up, thinking like an owner. And then you said right after that costs money, and then these kind of all cost money. So maybe just dig into that a little bit, the thinking like an owner. And it sounds like as an owner, Nate, and as you guys are managing, you guys were always willing to put money into the property. Can you talk a little bit more about that?
For sure. I think there's a different, when we got into Texas, the model was a little bit different. The model in the family was buy and hold forever. I mean, there's properties that, hell, I was working on them in 1986, right? They're still in the portfolio. Well, the model in Texas was fix and flip. And it took us 2-3 years to figure that out, that we didn't have to have the mentality that we were going to own it for 40 years, right? So maybe you hold off another year on the roof. Maybe you leave a little bit of meat on the bone for the next guy to come in and value add.
Yeah.
Whereas when you're managing, a family portfolio for 40 years, you're trying to stay ahead of deferred maintenance. And sometimes you do a little bit too much, right?
Yeah.
And you're not as concerned about cash flow or investors or distributions, or maybe, if you're paving a parking lot, maybe you put 2.5 inches of asphalt, not 3. So there's just different things that you think about as a long-term hold versus I'm going to reposition this. I'm going to rev the engine, get the NOI right, and sell it. Just a little bit of different things.
Oh, I can see how there'd be so many different things. What do you prefer, Nate? I mean, I guess to me, I think hold forever. I mean, makes so much sense if you can do that. You're not paying taxes. You can build up some incredible cash flow. Sounds like you guys have done that over the years. So you can really get good cash flow. Obviously, you got it in a great basis because we're just going to keep devaluing the currency. So prices are going to keep going up. Rent's going to keep going up. So you're benefiting from all that. Great cash flow, building a ton of equity, not paying taxes. You can just refinance and get tax-free money. But you don't have the velocity of money that you have when you sell. So when you sell, you can go and make that big chunk and put it back in. And like you're recycling your money, you can probably build wealth quicker as long as you keep hitting the ball and not missing. All right. Cause you can do that and then not make money. I mean, not every flip, even though, when you're flipping an apartment, not all of them make money. So if you take a step back, that's the thing with, holding, you don't have those misses, you just hold and cash flow. So I don't know. You've kind of seen both, Nate. I know you've had a bunch of success with both. Do you feel like everybody should do both or do you definitely prefer one over the other?
Well, I think just given the environment we're in today, you always have to have some cash flow assets in your portfolio, and those are the long-term ones. So I think you need that diversification. And what's great about where I'm at today is I have nice geographical diversification. I have Texas, I have Dayton, Ohio, Columbus, Ohio. In days like today, I love the Columbus, Ohio. You don't know the Dayton, Ohio, the slow, steady. You need those slow and steadies in your portfolio. So if you have too much of one, you get in trouble. So I think it's that nice mix. And so if all you're doing is fix and flips, you'll get caught. And so I think you got to have some steady eddies in there. It's nice you got to have your singles, you got to have your doubles, you got to have your triples. Yep. And as I get older, I don't need as many triples, right? Like I'm okay. I don't have to hit triples all the time. So these days I'm more into singles and doubles. Okay. And so I think having a mix in your portfolio is very important. That's what's going to get you through these times today. Yeah. Right.
Well said. Well said. Yeah. When things are humming and interest rates are low and cap rates are low, man, everybody's really well flipping, but now we've reversed that, right? Interest rates are gone way up. Cap rates have gone up a little bit too. So you're, it's not there. So really agree with that, Nate. And I mean, you've been at it, so much longer than your family, even longer. So, a lot better than I do all that. Everything you've seen, what does it take? What's a key ingredient for being a successful real estate investor? And I'll ask from the perspective of a GP, of an owner operator. What's maybe a key ingredient or two that you think makes a successful real estate investor?
I think that don't be afraid. You don't know what you don't know. So don't be afraid to ask. There are what I love about today's environment is you can pick up the phone, call, and I can have lunch with Lee and I can ask him, hey, Lee, what do you think about this? And I get so much help from other people. So do not be afraid to ask other people for some help. Yeah, I love it. How are you looking at this? What am I not seeing? If you get stuck in your lane and don't, I love feedback from other people because all the time I get another opinion. And if you don't get another opinion, then you're going to keep doing the same thing over and over again. So I just think don't be afraid to talk to other people and ask for help. Get another view. Right. It's so, I mean, whether it's a mortgage broker or it's or a counterpart, it's not foghorn leghorn. We're not trying to fight each other every day and be competitors in that sense. Yeah. I love it. It's so collaborative. And I think that's what makes a good real estate investor is collaborate, ask other people, get other opinions.
Man, I agree. Yeah, I couldn't agree more. It's certainly been helpful for me. That's why I jump at the opportunity to come up and have lunch with you, Nate. Hey, so then I always like to flip this question a little bit. And I ask, what's a key ingredient to being successful outside of real estate while, pursuing success in real estate? So how do you keep your priorities straight? How do you make sure you're, pursuing your wife and your kids and maintaining those things that, frankly, are more important than the success we have in real estate? I mean, we do the real estate probably for those things, right? So how are you making sure, what are some things you do to make sure that you're maintaining your priorities?
Well, let me go back and say some of the things that I wasn't doing right and where I messed up.
Yeah, I appreciate that.
The stress of a family business and grinding on the way up, was tough for me. I ground so hard. I wasn't being a good father. I wasn't being a good dad. And I ended up, just working too much, and I ended up with a drinking problem. And, I was using the alcohol to mask some of the trauma of the relationships with my family and being underpaid. And I'll go back. I wasn't valuing myself correctly. I wasn't giving myself credit. And, working in the family business, I was dramatically underpaid and for a long time. And that stressed me out. And so I ended up getting fired in 2018 from the family, and we can go down that, but I also ended up with an alcohol problem. Okay. And so I want to share that with your listeners. Don't grind so hard that your kid comes to you and says, Dad, can you give up vodka for Lent? And I'm like, I'm just working, man. I'm just working. And, don't be that guy. So I was that guy. I wasn't doing those things. So I've shifted my mindset big time since 2019 is when I got clean and sober and I got my side of the street correct. And I started focusing more and more on my family, and that's allowed my life to really hockey stick by spending more time with my family. And so, just don't grind so hard. You say you're doing it for, I'm doing it for this. Well, what are you really doing it for? Because if you grind too hard, you're not going to have anything. Unfortunately, I didn't hit, complete rock bottom, and I didn't lose my family, but I was getting close. I'll be honest.
Yeah.
And, it took my mother, it took my father, it took my wife, it took my kids to say, you got to get your shit together.
Yeah. So, man, I appreciate you sharing with that, Nate, and being vulnerable because, God's been good to me and I've been able to, fend off some things, but I mean, it is a challenge, to not grind too much. I'll say that, like you said it really well, that you were grinding so hard on the way up. When you're trying to build something, it does take a lot. It's not, hey, my boss, requires 40 hours, but I probably put in 50 I mean, there's times it's like, this stuff, feels like it has to get done. And if I don't do it, nobody will do it. And so I'm here still. And I'm, 10 hours a day, 12 hours a day. I mean, I'm trying to learn from guys like you. And that's why, again, it's so beneficial. I so appreciate you coming on so that, guys like me can learn from guys like you and not make some of those same mistakes. But maybe just, I would love, if you don't mind talking a little bit more about that just, how hard you were grinding and what that felt like, what caused you to do that. And then, just what a difference it is when you were kind of forced out, by being fired, but it's obvious you took a step back and said, I don't need to work that hard. And like you said, like now you've hockey stick. So you're like working less, but working smarter. Like just what were you doing then that was causing you just to grind so hard and have your head down so much that you couldn't maybe take a breath and see that what you were doing wasn't the right strategy? And then how did you make that change?
It's tough. The sort of I always think about my family. Okay. And how can that's my sort of superpower, I guess, if you will, is keeping the family together. And if I wasn't healthy, then the family wasn't going to be healthy. And when I say family, I say across, I have an 83-year-old father and an 80-year-old mother and my brother. And I put a lot of weight on my shoulders to make sure that I'm guiding the family the best I can. And I'm shepherding the investments and I'm creating multi-generational wealth for them. And I think that weight was a little too heavy on me for a while.
Yeah.
I don't know. I just, it was a challenge, and the speed of the deals and the relationship with my father, it was just challenging. And so I carried that burden on me and I realized that I've got to make this fun again. And, what's great is, my kids and my brother's kids and some long-term employees are in some of these entities that I am a part of. And so, what's really made it fun is sort of stepping back and looking at that big picture. We have one entity, which is so awesome. It's been around since 2000. It owns properties. It invests in other people's deals. And I get to have these meetings with my kids in there now that they're getting a little bit older, and I can share what I do. And one of the things that I've figured out is, you know what, I've got to be responsible here. I've got to think about the family in the big picture and passing this along and being responsible. And how do I want to educate my kids? And Lee, I told you the story, you know, it's fine if you're doing, I mean, I'm sure every real estate guy out there does this. Hey, you're coming home from a soccer game. You're like, hold on a second, kids. I got to drive through this apartment complex.
Yeah.
But you know, we tried to make it fun. And I think once I realized that this could be fun, and we have this thing in our family, and we call it the doorknob. And so when I buy a new property, I'm like, hey kids, we got a new doorknob. You got a new doorknob today on a deal. And they're like, dad, where's the doorknob at?
That's
and so just,
awesome.
you know, making it fun, and these entities that we've had for a long time and the kids are in. And so it's sharing some of this, and starting as I get a little bit older, starting to think about my legacy. What do I want to leave behind? Like, I don't want to leave behind a dead, you know, I don't want to be the guy who's dying because I drank too much, and that's no fun. So just trying to make it fun again, and talking about, and one time the kids got me this doorknob for Christmas. It's on the mantle. It's awesome. So talking about the doorknob, and what does that mean? And what's it mean for them to be responsible limited partners? How do they treat their cousins that are going to be their partners? So as I'm getting a little bit older, I'm loving talking about that part of this business, right? Like the legacy and how to be a good partner and everyone get along. That's starting to be the fun part for me now.
Oh, good, man. I love seeing that you're in such a healthier space. And it just seemed like, you know, probably you were just really in the weeds and then just taking on way too much burden, you know, putting too much on yourself. I'm glad you've been able to step away and say, you know, I can't control everything. I can't be responsible for everything, but I can, you know, step back and work, you know, at a higher level and bring everybody together. And man, those entities, I mean, what a cool thing, Nate, for you guys to have as a family, for you and your kids to have these entities that own properties that can invest passively. And then, to have these family meetings and talk about, hey, here's what we're invested in. What do we want to invest in next? And, oh man, look at this return. And this property just sold. So we got, I mean, I think that's the dream right there. I think that's what a lot of us are going for, is to get to that point where, we've got our kids in it and we're building this. I mean, you guys are building a family office there, Nate. That's awesome, man. Congratulations on that.
Thanks. Yeah. I mean, it's weird. It sort of morphs over these years. And as mom and dad get a little bit older, and you know what I tell I have a 17-year-old kid who's getting ready to go to college, and, you know, we're talking about, well, everyone's like, what are you going to major in? And I said, bud, you can major in whatever you want, right? Follow your passion. At the same time, if you can learn to be a good partner with your cousins and learn how to be a limited partner and get a little bit good at this investment side, the passive side, you don't have to be active. You don't have to follow in dad's footsteps or grandpa's footsteps. You can follow your passion and have this. You can have both, right? You can do what you want, and this passive investment side can help fund that. And I love that. That's rewarding to me. Oh,
it's awesome. I mean, I just think what a you know, a cheat code or they get a head start is what I'm trying to think of. What a head start for your kids, because I'm just thinking of the cash flow quadrant that Robert Kiyosaki talks about. And, you know, you got the employee and self-employed side where, like, you know, you're working for somebody or you're have your own business, but you're still trading time for money. It's just your own business. And then on the other side, you've got business owner and investor, and your kids are getting to jump in as an investor right away, early on, and be on that side. And I mean, that's the side you want to be on. So what an awesome thing that your parents and then you have set up the family to have the kids be able to jump right in on that good side of the quadrant and be an investor. But you got to do it well, right? And the idea is for them to continue to grow the wealth that you guys have worked so hard to build. Man, just what a cool thing that you've set your family up with.
I want to jump in. I see Rich Dad, Poor Dad behind you. And my 12-year-old, we were sitting at and now, okay, I bribe him to read that book. Okay. And so I'm paying him like an allowance to read that book. And then he breaks it down chapter by chapter. And we talk about it. This is a 12-year-old. The other night, my 14-year-old, we're sitting there at the table and she's like, I'm going to go get a job. And my 12-year-old pipes up and he's like, well, why don't you just read the book? And he's got Rich Dad, Poor Dad. And he's That's like, awesome. Well, I'm listening to it on YouTube and I got the book. He's like, I was mowing the lawn and listening to the book. See, I was double dipping. He's telling my 14-year-old this. It was like, wow, he is jamming, man. If a 12-year-old is going, I'm listening and I'm working, I'm like double dipping here. I get it.
That's how you work, man. Work smarter, not harder.
Exactly.
I love that.
Exactly.
That's awesome. That's awesome. Yeah, this has been great, man. I appreciate you being so vulnerable, open, honest about some of the struggles that you've had, because that stuff's real. I mean, when you're trying to build something, when you're grinding hard, it's difficult. And there's things out there that we can fall into. But man, just love seeing what you've been able to do and come out the other side. So it's great for all of us to be able to learn from you. So I appreciate that. Before I let you go too, I always like to ask my guests, Nate, how might my listeners and I be praying for you in the coming weeks?
You know, I'm turning 54 next month, and I would like some clarity on the balance between spending time with kids and work, and figuring out what I want to do when I grow up.
Yeah.
I'm trying to find that out. Like, should I put it in 6th gear again? Should I put it in 3rd gear? I'm trying to find my happy place.
Yeah.
Right.
Yeah.
That's
what
on
the back 9. And how hard are you going to play the back 9? Yeah.
Yeah.
Yeah. That's good, man. No, I mean, that's I love that I love what you think about. I mean, this, again, kind of contrast to where you were, a handful of years ago when you were grinding so hard. And it seems like, I mean, I'm just picturing you with your head down, like you can't see because you're just working so hard. And now like you're really being thoughtful about it. And what do I want? I mean, maybe I do need to hustle, but maybe I need to pull back. And would love to pray for that with you. I'm always kind of praying that for myself. So well, good, Nate. Man, thanks again. This has been great. I appreciate you coming on, sharing with the audience. It's been a really good episode. I appreciate your time, man.
All right. Thanks, Lee.
Yeah, take care.
Man. Thank you, everybody.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.